Hey everyone. I feel weirdly guilty that this market is so damn boring. I don't know why. It's not my fault. I mean, I shouldn't feel guilty for delivering you a market that sucks, but I also shouldn't take credit for a market that's exciting. But yeah, that's just the nature of the beast because if I were a political commentator, I would look toward like October 2024 as like an amazingly exciting time. Whereas, a year later, I'd have nothing to do. Stock market's kind of like that, except it's unpredictable when it's interesting and when it's not interesting. This chart here of the VIX kind of illustrates what's been going on in recent days. This is just over the past year or so. And just from time to time, we get bursts of real market activity where data actually matters. And we get up into the like 30 or so. So we did it here, and we had a lower high, and a lower high, and a lower high, and a lower high each time. And so the last time we had an honest-to-God, exciting, interesting, engaging market was way back on March 13, which feels like about 20 years ago or so. Because the thing is that, if on the first of the year, a magical fairy from the future said, look, I can't tell you what the market's going to do, but listen to me. The second, the third, and the fourth biggest commercial bank failures in history are going to happen in March. You would assume that the apocalypse was upon us, and instead, what do we have? A market that's barely below lifetime highs. And look at a stock like Eli Lilly, and it does nothing but go up every day. So the news doesn't seem to matter too much. Kind of like when those hedge funds died in August 2007, I think it was. It was kind of an interesting news tidbit, but didn't really move the market until like a year later when all holy hell broke loose. So be that as it may, the market is a complete drag these days. And hopefully, as we're down here at the 15 and 16 level on the VIX, we can anticipate, as always has happened before, some kind of lift. Sometimes it takes very little time for another pop to come. Other times, as with here, it goes on for months and months and months of drudgery before things get kicking again. So there we have it. And I do imagine if all holy hell does break loose again, we will get a lower holy hell than before, just like always. Maybe we won't even get out of the 20s. But I would take 29 happily now compared to friggin' 15 and 16 type levels on the VIX. The cyclic nature of the ES is extraordinarily old news by now, but it's really all I got to say. Here again, this is a daily chart going back a full year. And with the brief exceptions of this overshoot and this undershoot, it is amazing to me that these two simple Fibonacci retracements incorporate 90% of all the trading activity for the entire year. And it's like, go to 3,800, go to 4,200, rinse and repeat. And that's also okay. If the aforementioned time traveling fairy came forward and said, look, I can't tell you all the wiggles and waggles, but I can tell you over the next month, we're going to go to 3,800 and we won't get above 4,200. I can absolutely work with that. And that is the most logical, some may even say obvious. And of course, if it's obvious, it's obviously wrong, right? Isn't that what the one of those market saws is? Joseph Granville, I think. But Joseph Granville's dead and I'm not. And my view is that if we're stuck in this cycle, then the thing to anticipate is a move lower toward the bottom of this boring range, but we can still work with it. Tech stocks have been especially strong, nay robust lately. This is the same period of time with them, and it is not nearly as neat. They have spent a lot of time above the Fibonacci and a lot of time below the Fibonacci, and it's not a sine wave at all. In fact, it has more or less been a tech bull market since October 13. That was the bottom, and it's been a series of higher lows and higher highs. Some big swings along the way, but that is in fact the case. Higher lows, higher highs is the very definition of an uptrend. And I have cooled rather quickly to my tech shorts. You know, today in particular, Zscaler, that is symbol ZS, zapped me bad. And for the 3 millionth time, I think, I sold my MDB puts at a loss, and I finally just said, "You're fired," again, and I moved them. They're not only are they not in the bear pen, they're just like, you know, they're off in a corner with a dunce cap on. So I've really I do not get along with Mongo database, which is a shame because it was a wonderful love affair, amazing top, but it just doesn't seem to be working out. So on that happy note, I'll just summarize. Tuesday may well be dull as well, as we all anticipate the CPI on Wednesday morning. I'm going to remain light until then. I have a little over 30% cash, and I've got a pretty small number of positions. I think 16 positions now, as opposed to like sometimes I have twice that much. So pretty sedate, pretty calm, and just really a little exasperated. And after the CPI, maybe then I'll get more into it. So apologize again that my magic wand is not working on the VIX. We'll just have to let time do its magic. So thanks for your attention. I'm going to be occupied in San Francisco for the afternoon, so I'll probably won't do another post. So anyway, hope you're doing all right. Thanks.